Good morning, good afternoon, good evening, whatever time you're watching this. Today we're going to go over the only technical analysis video you ever need to watch. So I'm sure we've all seen it. There's so many strategies out there nowadays that you just don't know what to choose, and everyone says something different, and most of it is just regurgitated. And what I want to cover today is just the only technicals you would need to use. You don't need to use no fancy phrases. You don't need to do anything along those lines to make you sound like you know what you're talking about. Just keep it simple. You know, simplicity pays at the end of the day. And today we're going to go over just how simple you should keep your technical analysis. So, requirements for this video. So obviously we're not here to teach you what is a pip or the absolute basics of trading. I can tell you many YouTubers and many traders out there that you can go to learn that stuff. But as you said here, the absolute basics of technical. So this is what you need to know is obviously what is a pip, what is an uptrend, etc. What's a downtrend, what's a breaker structure, etc. Don't overcomplicate the process. Simplicity pays. This is really important. Is, as I mentioned, not literally 30 seconds ago, about how people need to use complicated phrases, and they start arguing with people and saying, "Oh no, this actually means this. Oh, you're saying it wrong. It's actually this." Honestly, who cares if technicals work? There is no right or wrong answer with technicals, and every strategy works in their own way. It's just how you apply it. So we'll get onto that in just a moment. You must at least have an idea what order blocks are or what support and resistance is. But every strategy works. It just depends on what you prefer. Again, we use order block strategy because it works for us. It's clean and simple. But we also incorporate a bit of support and resistance, a bit of key levels, which we'll get into in this video. And again, I need your patience and time. This is... we're only at the start of the video. I have no idea how long this is going to take. It could take us an hour. It could take us 2 hours. It could take us 2.5 hours. So I need your patience and time. You can always come back to this video and watch it. Technicals is a way of getting into a trade and not determining where the trade should go. Fundamentals is for currency direction. I can't emphasize this enough. Your technicals that you see in a chart is just a reflection of what's happened fundamentally. So why did euro dollar push from 112.5 or 113, whatever it peaked at, all the way down to 104, and we're actually below 105 now? Why did it do that? There has to be a reason for that. So again, if you understand where the fundamentals should go in the future, all you have to do with technicals is just find an entry. And this is why you have to keep your technicals extremely simple, because you're not doing much emphasis on the charts in terms of your lines or whatever you want to use. It's just a way of saying this area seems relatively decent value, and I'm looking to buy or sell within this. So of course you can watch our FX Fundamentals Bootcamp for an insight into what drives currency direction. It's obviously on our YouTube. I'll put that little thing that people put nowadays in a YouTube video at the top right. But to join our team, of course, you can follow our website at www.bermondoutlooks.com. Again, we have a lot more on our website. Now, let's start off first with, have you ever wondered, actually, let me ask you this question. Have you ever wondered what technicals are like in an institution? Because obviously we've spoken to a lot of traders. Obviously, within BMO on the team, we have a monthly, so we have what's known as like a monthly guest. So basically we'll get like a guest from institutions. So we'll speak to like traders or ex-traders or managing directors or quants and just ask them just about the markets and about everything. And they state, the technicals are extremely simple. They do not go into depth and I need to do this and I need to draw this and I need to write this phrase here. They just keep it extremely simple because all of the work comes from the economics, the data, the Excel spreadsheets, etc. We're not going to go over that today, of course, but to get like a little bit of an insight into what drives currency direction, please visit our YouTube. We have put all the basics you need basically on there. Now, let's move on to what institutional technical analysis looks like. You might look at this and actually laugh, but in reality, everything works. It's just how you apply it. So this is it, institutional technicals. So on the left here, this is from their research documents, by the way. So these are accessible by traders and clients at the bank. Again, you won't find this online in terms of like Google and get access to these documents anyway. You might get snippets and screenshots every now and again that you might see, but every strategy works at the end of the day, and you can see how simple they keep it. Now, obviously, this is RBC Capital Markets, and this is obviously Bank of America. You can kind of see that they have similar technicals, but all of their fundamental direction is gauged from the economics, what's happening in the Fed, what's happening with the data in Europe, what's happening with China and their recovery, everything. And then they say, okay, cool, based on all of this, we'll go over, how they get their targets as well. It's really simple, actually, to understand why do they say it's going to drop from 110 to 105 for euro dollar? Why do they say for GU it's going to go from 125 down to 120? How did you know that? And I'll show you how they do that exactly. Very simple, and it's not complicated. So as you can see, very basic technicals, a bit of lines and a bit of key levels. So again, 105-ish is a key level. This down here at 107, big key level. Then they've got all of the levels at the top here, especially for RBC Capital anyway. Yeah, peaked out around 112. 76, that was the one. And then, 110 is another key level, and of course, parity at 1.00 for euro dollar. So we'll go over a bit of that later on in this video. But as you can see, screenshots are from their FX research documents that are accessible by traders and clients at the bank. We get sent these documents at BMO, of course. We get, HSBC. We know somebody who works there. He provides us with a lot of insight into how HSBC trades. Goldman Sachs as well, and many more, as of course, as you can see in these examples. We've got RBC Capital Markets. Firstly, they put all of their fundamental reasoning based on what the ECB is doing, based on their growth data, based on what's happening in China, higher oil prices, obviously weighs on massively on the euro area because they're a big importer. This suggests this for the currency. Okay, cool. Now that you have your direction, trade your direction only. If you're fundamentally short, let's say euro dollar, which we are, why would, we switched our fundamental bias at the end of July from bullish to bearish. But why would it move lower? What's the actual reason? You can't gauge that from a technical strategy. Again, the fundamentals gives you clarity to hold those positions and to understand that you are trading in the right direction. But of course, you can see our Telegram for examples. The link is in the description. You can click onto that. We send through all of those docs and everything within that. And of course, if you want to be able to access all of these documents and the forecasts, which we'll just show you in just a moment, you will have to be a member of BMO, of course. Now that we've covered how basic institutions trade and how simple they keep their technicals, because remember, all of the work comes from the data, the data-driven thought process. Sounds boring, I understand. Yeah, I agree. I was really bored at the start trying to, what does GDP mean? Oh, this is really boring. But I think it's like anything, really. I think the more you do it, or naturally, the easier it becomes. But I think the more you understand it as well, that's really, really key. The more you understand it, the more fun it gets, because now you actually understand you're in flow with what the markets are thinking rather than just guessing. And just guessing just seems a little bit silly, in my opinion, anyway. This is institutional trade ideas and targets. I've obviously scrapped out all of the names here and stuff because obviously I don't want to put that on a YouTube video. But as you can see, they had all of their fundamental reasonings. I've blocked them out, and of course their targets and their stops and the position they opened at. But if you notice here, they obviously entered at 1.0888. Their target's at 1.0990. Seems like quite a wide stop loss, but to be honest with you, as I'm sure some of you follow me on Instagram, you see when I do my videos and I mention about how one of the biggest reasons why a lot of traders lose money is because their stops are way too tight. And again, it seems a little bit not premature, but it seems a little bit silly maybe from what you've seen. And to be honest with you, if you are consistently hitting, ATR, or you're consistently hitting 5 pip stop loss, again, you will be the best trader in the world, and that's just a reality. So you do need to start to widen those stops slightly, just so you can counter the volatility, because having a 5 or 10 pip stop loss on a trade like Euro Aussie or gold just is not doable long term. You do need to slightly widen stops on certain pairs. Like I just mentioned, Euro Aussie is really volatile, but like a Euro GBP, who is a bit more slow moving, or like a Euro Swissy, a bit of a more slow moving pair. So you can probably tighten up those stops slightly, not too much, but you can tighten them up. But of course, we're not going to go over that in today's video. But as you can see, they have their fundamental reasonings, then they just get in. And if we go back, this is RBC Capital Markets, and this would have been their technicals. So you can kind of see how they think they get the reasonings, then they just draw out simple lines and say, okay, if we break below this, we're looking to sell anywhere within this level between this and this is pretty decent value. Let's get in here. And then they widen those stops slightly. For example, like a Goldman Sachs, we had a trade idea from Goldman Sachs a few weeks ago. And they were obviously looking to short your account, which it did massively. And if you, obviously I'm recording this on the 4th of October. Some of the screenshots, for example, which we'll go through, I screenshotted a few weeks ago, just because I couldn't get around to doing this video. Apologies for that. But, you know, the EuroCAD is a big trade to the downside. And, you know, they had their reasonings there and their technicals are really simple. So again, there is no right or wrong answer with how you do your technical analysis. Everything works at the end of the day, just how you apply it. Now, let's have a look at the following slides. So obviously the following slides are our own rules to technicals. You will find rules that works for you. There is no right or wrong answer, and every strategy works and certain market conditions will favor certain strategies. So I'm sure we've all been trading sort of now. By the time you watch this, I'm assuming it's been a week or two. You would have noticed how a lot of traders or a lot of trades, shall I say, that you're getting in, and you're probably wondering like, why is it just consistently missing my entry? And that's because market conditions have changed slightly. So you might have noticed how like I mentioned, your order blocks are not going to get hit, and you now have to adapt to that market condition. Naturally, it may reconnect and a bit of order blocks may be getting hit, but at this given stage here, you have to be adaptable in trading. Don't just work like a bot and just work one way. You have to be adaptable in this market conditions. So of course today we will be looking at NZD CAD as an example in today's session. We will look at other currency pairs when we jump onto the live chart. So the way I like to teach is get up a PowerPoint or whatever, and then what we'll do is jump onto the charts and show you live, because it's all well and good doing screenshots, but if you're not showing it on the live charts, people aren't going to learn. And people learn differently, right? So you obviously have to cater for that. So firstly, how do we start our charts? So I will go through all the boring stuff first, all the PowerPoint, and then we'll go on to the live charts, which is what I really want to do today. What we do is we get a higher time frame analysis. So obviously this is NZD CAD on the weekly. You must start on the high time frame to be able to find order blocks that seems like a good value. Remember, markets are under, all you've got to do with trading is just understand where is good value, what's expensive, and what's cheap. And all you're doing with this order block strategy or whatever strategy you want to be using is you're just finding value. We then refine down the timeframes, of course. We'll obviously show you that will be shown in the next slides. And if there isn't a good weekly order block, don't worry, it isn't a requirement. So for example, you might be looking on like the weekly time frame for certain pairs and you see no weekly order block. It doesn't really matter. But again, all you're doing is just finding value here. So firstly, start off with your weekly. We're going to go through all the boring stuff first on the PowerPoint, and I'll show you on the live charts and different currency pairs as well. Start on your weekly time frame. Find your order blocks, mark them out. Like I tend to just box them out, and then I'll show you kind of what I do from then on. Moving on from the weekly time frame, of course, I'm sure you can guess it, is we're moving down to then the daily perspective. So as I said, moving on from the weekly, you then go down the daily time frame to refine the weekly order block. By us refining the OB or order block, it just allows us to get a better region. So obviously you're just trying to just find areas where value was previously. And as you can see, there is one area where there isn't a good daily order block. So obviously there's one up here. So buy, big sell, 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 sell. And then there is no daily one within this. As you can see, doesn't matter. This is why we continue to refine to find a good area. So moving on from the daily, and this is what I mentioned about how you need to have an understanding at least of what order blocks are, what support and resistance is, because I'm not here to teach you what an order block is. I'm not here to teach you what an uptrend is. You can literally find that for free on Google. This is our technical strategy. We're just showing you how easy you should have your technicals without complicating it and using fancy terms nowadays, which a lot of traders want to be using. But in reality, people just want to be pretending like they know how the charts work when it doesn't need to be that complicated. So moving on from the daily perspective, this is what we then do. So we start with the weekly and say, okay, there's a weekly order block here. Let's mark it out. And then we go down to the daily. Now what our next time frame is just halving that. So we then go down to the 12-hour perspective. So obviously moving on from the daily, we work to the 12-hour order block, half a day. As we move down the time frames, we may get some time frames that suggests an order block there and others that doesn't. This is why we have a box that we extend as we move down the time frames. So what I mean by that is how, if we go back here, if I notice how we start with the weekly and we box it out here, we then go down to the daily naturally, and then that daily here is incorporated within the weekly order block, and it's within this box, right? There's nothing here, but what I also then noticed, if we go down, is how there's a 12-hour order block here, but if we go back, how the box is slightly higher. All we're doing is just dragging it just to incorporate that 12-hour. This isn't where we get into this region and we instantly sell it. This is why even like support and resistance works for people, is because they don't rush into trades. And a lot of reasons why people get to trigger happy is because they get into a region and they just instantly sell it, hoping that the market turns. And you don't trade on hope. That's the biggest thing, is you don't trade on hope. You trade on what you see. And if you're not seeing a reversal, why would you enter? So all we're doing here is just finding a box, and we're just saying, okay, this seems like pretty good value to us based on what we've, based on our technical reasoning. All we're doing now is waiting for structural breaks, which we'll get onto at a later, in the later slides anyway. So 12-hour, all we're doing is just finding and expanding the box slightly. Please note, if you have created a box on the weekly, it may be good to move the area to the daily, as the weekly box may be quite a large area. Of course, you might see on some trades where there's a huge weekly order block and you just extending it out and you're like, ooh, and then you drop in the time frames and the box just gets extremely large. So what I would do is just go down to the daily in that scenario. I'll definitely keep an eye on that weekly order block. I'll keep an eye on that open and whatever. But I would be a bit more inclined just to go down to the daily, just so it's just a bit of a smaller box. Technically, if you want to be extremely technical, you can just leave the weekly open, and of course that's still a valid region. But again, it is completely it's completely up to you really at the end of the day. This is a zone where we watch the lower time frame structure to find entries, as I've just mentioned. We will be obviously explaining that in later videos. So where do we go from the 12-hour? So we've refined it down from the weekly. We refined it down to the daily. We refined it down to the 12-hour. What do we do from here? So all we're doing, remember, is just finding a region that's relatively good to enter from. And then you obviously have a entry strategy, which I'll go over one of them. We have two entry strategies at BMO. We have obviously the breaker structure, a pullback into a region and sell. I think a lot of us do that here. That's quite a valid way of trading. And we also have a 2-candle swing strategy. We're not going to go over that today. We may be, if you do want that, please just drop 2CS, so 2-candle swing, in the comments, and we'll go over that. But today we're just going to look at the simple breaker structure, pullback into a region, and then look for sales. But again, we're going to go over that on a power pump. We'll also go over that on live charts as well. So on the 12-hour, we then go down to the 8-hour. Moving on from the 12, we then go down to the 8. Remember to extend the box of the 12-hour to encompass the 8-hour closure too. By going down the time frame, you will have a good area where there's a lot of regions that price may react to. So again, how here you can see that there's there's a bit of an 8-hour there and a bit of an 8-hour order block here. If we go back, all we're doing is just extending the boxes to just finish that closure. And then one here as well. It's within the 8-hour. So, this is within the weekly order block, sorry. This higher one here. So we don't alter the box. If this 8-hour is like down here, then yes, we'll just drag it slightly lower just to encompass that 8-hour. Remember, it's not about, we need to find extremely sniper entries, because the institutions don't do that. And you notice how a lot of people bang on about trade like a bank, think like a bank, when in reality you don't look at what banks are looking at, which at the end of the day is the economics, and the technicals are really simple. So don't worry about trying to get sniper entries, trying to get the wick entries, trying to get like 1 to 100 risk reward or whatever people want to be trying to do nowadays. Just again, this is a long-term game for you, and trying to rush it, you won't see success by just trying to rush this trading career. I've obviously been doing it for 5 years, and I've gone through a multitude of strategies. I just found one that works for me, and I've stuck with it. I started with support and resistance. Didn't work too much for me. It's probably because I didn't understand it too much to a certain extent. And then I moved on to order block strategy. I think 2020 is when I started to do that. And then that's when I started my fundamental sort of journey in 2020, sort of during COVID. There's nothing else to do. So I thought, well, let me just learn this. And I've just continued to know. I don't know everything in fundamentals, but I think that's the good thing, is that you never know what everything is, and you're always learning. That's what I like about it. With technicals, it's all the same stuff, just named differently so people can sell you something. When fundamentals, there's just so many things out there. Different asset classes. You might look at bonds, you might look at FX, commodities, equities, money markets, which is obviously within the encompass of the bond market. So again, there's so much to learn. Trust me, there is a lot to learn in trading. It's not just technicals. I remember I didn't start this until 2020. So my entire strategy, I obviously started in June 2018. I was always a technical trader. So again, you live and you learn at the end of the day. So obviously now that we've got the 8 hour, what do we do from here? Again, all we're doing is just finding a region, finding an area, what seems like good value. And then you're looking for an entry strategy, which will, as I mentioned, we'll go over one today, but we'll not go over the next one. If people want it, we'll happily do that. But we'll start with one that a lot of people knows and a lot of people are doing correctly, which is good. Now, moving on from the 8, we then just go down to the 6. Nice and simple. And all we're doing with the 6 is doing exactly the same thing as we've been doing for the 8. We've been doing for the 12, we've been doing for the daily, we've been doing for the weekly. We're just finding regions that works, and that is encompassed. So as you can see up here, it's a tiny little 6-hour order block, this one here, and then it's sold off. This little buy candle here, right where my cursor is, and it's sold off. And there's another tiny one there. But as you can see, it's in the box anyway, so we're not altering it. We're just leaving that box at foot. Now, of course, just similar to the 8 other hours. What do we do from the 6? Well, I'm sure you can guess it by now, is we just move down to the 4 hour. And this is where we stop. We don't go anywhere below this 4 hour order block, because as you go down the time frames, it becomes a lot more choppy. And I'm sure you've heard the phrase, which is 100% correct, is the high time frame analysis and the high time frame dominates everything, which is true. Because that high time frame analysis is showing you sort of what institutions are thinking. It shows you the fundamental potential views, whether they're tactically playing that or fundamentally trading that on a longer term perspective. Again, there's 2 types of strategies out there. In terms of tactical plays, is trading a short term theme. So for example, you might see like a bit of data that comes out and the markets will trade that tactically. A bit of oil weakness. So of course we are recording this on the 4th of October 2023. Obviously, if you look at oil today, massively slumping, and that's obviously because there's a lot of issues with growth, and the growth concerns are starting to mount. And naturally, who does that have a trainer on? That trains on the CAD. And if you look at GCAD, again, that got also double whammied from another tactical play where the UK, the services PMIs on the finalized actually got revised higher. So it basically suggests to the market that it's not as bad as what we were thinking. So a tactical play in the near term is GCAD higher. Fundamentally, we're obviously shorting that, but in the near term, that's a tactical play. Went off a little tangent there, sorry. But all we do is we go down to the 4 hour, and this is where we stop. To find entries, we go even lower than that, but we're not finding entries at the moment. What we're doing is just finding regions that is relatively decent. Obviously, as I mentioned, this is finding we don't go anywhere below this when we are working from the weekly, and we only go to the lower time frames when we see structural breaks out of our region, which we'll go over in later slides. So for example, here where we bang, we mark this out, we saw this, we then saw a break. That's when we were like, okay, cool, this region seems like it's holding. Let's go to that lower time frame. Then we'll go over that in later slides anyway, but that's just an example. Now, let's look at some examples on the live charts. So let's have a little bit of a look at how we just used the high time frame analysis against other currencies. We'll look at euro dollar. We'll also look at like GU, maybe AU. I would also tail back to NZD CAD as well, as shown on the PowerPoint anyway. So firstly, let's start off with euro dollar. Now, what do we do with euro dollar? Obviously, first we get our fundamental bias, and obviously we're fundamentally short euro dollar. Now, there are different sort of trades you can take: tactical trades, fundamental trades, intraday trades. Obviously, we're more interested in working with people who want to be swinging and getting into and holding those positions for many weeks to months as well. We have some people in our Discord who's been holding trades for just ages, and they're just they're not worrying about constantly looking at the charts, which is ideally what you want to be kind of moving toward. Because at the end of the day, you're eventually going to get bored of looking at the charts all the time. You're going to want to switch your strategy. You might as well just start now and do it, because it happens to everybody. So yeah, euro dollar. Firstly, we'll start off with the weekly. So what do we do with euro dollar? So weekly time frame. Obviously, we're fundamentally short. So all we're doing now is just looking for supply candles. Again, remember, every strategy is different, so it just depends on what you want to be doing. But overall, you want to be selling with the market, right? You're not buying and guessing, because if you're buying, you're basically going against the market. So you're not technically trading with the banks. You're basically trading with opposite to them. And that's why when you tend to take the opposite side to your trades, when the trend is, if you're buying in a downtrend or selling in an uptrend, that's why sometimes you probably take a bit more losses. So you just need to alter your mind and think, actually, you know what, I probably need to trade with what the market is doing. And obviously you get that from a fundamental bias. So firstly, as you can see anyway, euro dollar on the weekly, there is no weekly here for us to look into. So that's fine. Apart from this one here. Apart from that one there, it looks like it's already been mitigated though. So then we go down to the daily and do exactly the same framework. So if we ever are going to, it went nicely into that daily there. Also took out the highs there. So that would have been an absolute clean trade. I did enter just after that sort of move lower though on this move here. I am still holding that position though. So on the daily, as you can see, there's a little bit of a region here. That's if we get a pullback that deep though. Remember, markets need reasons to pull back trades. And they mainly use reasons as to new news with data or new news with sentiment. Positioning squeezes can happen, but positioning squeeze would only happen if something happens with the opposite way. So for example, if the markets are heavily long, similar to what we've seen with the pound actually, where the markets were heavily long the pound literally a few months ago, and a couple of issues in the data created a big sell-off, and that's why we saw a huge sell-off in like GU, because there was a lot of position squeezing there. So that's kind of the main reasons why we would see large pullbacks. So for euro dollar to push all the way back up into the 108 handle, give or take, we are going to need a significant shift in maybe weak data from the US, or a renewed optimism in like China, for example. Those are reasons for the markets to pull back that deep, or maybe even trade higher than that. It all depends on if that news flows continue. Then what we would do from there, as you can see, there is a little bit of other regions here that you would have monitored. However, euro dollar is trading slightly higher today, or literally last week, and that's because obviously on Wednesday last week. So obviously I am recording the technical part of this video on the 9th of today, as you can see, the 9th of October. Obviously during last week anyway, from Wednesday, we did have weak ADP. NFP did come in stronger though, which again, the markets were pretty volatile about. And obviously we come into this week with the issues that's happening in Israel and of course Palestine at the moment. And obviously it is also, you can tell back to obviously the 9th, which is obviously today. It is also US and Canada's bank holiday. So the markets are slightly more on the quiet side, so we should see some volatility pick up tomorrow. But overall, we come into this week as well with a bit of risk off flow. So obviously the dollar is pretty good in that environment, but markets, the main markets aren't exactly, US and Canada. They are on bank holiday. This is why markets are slightly quiet today. Then we go down to the 12 hours. So obviously, remember, start with your weekly. You can't see there's no weekly order blocks here. So it doesn't really matter if there is or it isn't. Ideally, yes. But as you can see, it doesn't really matter. Daily, then do the same thing with the daily. We'll go on to, obviously, the other bits of the PowerPoint as well in regards to sort of psychological levels and how you'd use that and the lower time frame. And we'll tell back to like euro dollar on how we can apply that with what we're doing now. But at the moment, all we're doing is just looking for order blocks in this part of the video anyway. We'll go into the other stuff later on, but for now, we're just looking at the standard order blocks. Remember, because we're fundamentally short the euro dollar, we're only looking to sell, right? So even if it does something like this, right, where it's breaking structure here, or breaking some, let me just remove this magnet, breaking some structure here, technically that's break a structure. I don't care if it's called change of character or whatever people want to call it nowadays. Stop using fancy terms, just keep it simple. Broke above that high and broke above that high. Again, if it does this, we're not buying it. I don't care what structure's telling me. Ideally, we'd like it to continue to the downside, but all I would see this as is just a higher move to then go lower again, because if nothing's changing from a overall fundamental aspect, markets will do something like that. And have you ever wondered why it does like this? Bang, you get in, very nice trade, amazing. You trade it back up, then does this, and you're trying to buy up again. But then it does that and just breaches through all of your areas and gets stopped out, and then it goes all the way back to lows because the markets probably saw a bit of reasons to get long tactically in the near term. Tactically, when you hear institutions say we're trading something tactically, it just means basically short term. So we're trading a new news flow or a bit of a risk on or a risk off environment, for example. Depends what trade or what pair you're taking, of course. But have you ever wondered why that's something that happens? It's because the markets, nothing's changed, right? From the holistic picture. Something new probably happened, but the markets probably looked at everything and said, actually, it doesn't really change anything. And then they got short in when a region that they saw deemed fit, right? As you saw at the start, is RBC and Bank of America. They use very simple analysis, and they'll do exactly the same when trying to find an entry point. HSBC, as I've mentioned, does use extremely simple entry strategies. They use some moving averages, actually. If you want me to actually go over some of the institutional docs in regards to how they trade and what their thought process is, please, let us know, and we'll do some YouTube videos or maybe like Insta Reels or whatever. But that's definitely something we can do if you really want that. But have you ever wondered why that happens? Is because markets are just trying to get into an area where they seem deemed fit, and then it will eventually sell off like that. So if we do get up to sort of this area, amazing. Ideally here, because there's also a nice big old 108 handle there, but we would need something significant for us to trade back up to those regions. But that's what I would do, is just go to the daily. As you can see, nothing really appetizing in the near term on the daily. Obviously, we'll get into other bits on how we can work out different sort of structure. But in the at the moment, we're only looking at the order blocks. We'll get into psychological and key levels in just a moment. 12 hour. So go to, again, I use rectangles. Doesn't really matter what you use. But there's also a little bit of a 12 hour here. So if we do trade back up there, amazing. Ideally, the bigger the move higher, the better. It's because we can get into better opportunities. So again, on the 12 hour, we can't really see anything in the near term here. This is if I'm going to be re-entering on a sell for euro dollar. Then go down to the 8 hour. It's a little bit of an 8 hour down there. So I'll just mark that out. Again, I'm not really extending that box. Or I could extend it, but again, it's just a region, right? Doesn't really make any difference if I do or don't. It's just a region where I may just monitor price action. So I'll do this and I'll be like, okay, cool. Basically, anywhere within that is where I'm going to be eyes on structure, because there's a lot of points there for us to consider. So what I would do is just do something like this. Where's that little drawing tool? Brush. Why have I still got that magnet on? Brush. Trade up, wait for a break, wait for a pullback, and then you can look at your kind of order blocks and say, okay, that is a relatively decent region. And because you're looking at from the high time frame going down to this, we'll get into lower time for a break destruction in just a moment. But then all you're doing is you're aiming for the next level, right? And the next level for euro dollar would be around 104, 103, and that's where I'll trade it to. So if I get in at here, my targets will be around 104, 103, because I'm fundamentally short euro dollar still, and there is more downside to come potentially. Based on what we know at the moment, that could change tomorrow. We don't know that because we're not there, so we just have to trade what we know, and obviously react when we see something different occur from a economic standpoint. Until we haven't seen that, markets still want to get short euro dollar, which they do. Now that's kind of what I would do for euro dollar if I am to do this. Now obviously we can go down to the 6. It's a little bit of a 6 there. There is a 6 here. So again, what do I do in this scenario? Just pull that box slightly higher, just to encompass it. Remember, this isn't an area for me to say, okay, I need to get in here. It's just to say, okay, this is where value lies roughly. So let's just play with that value or thought process, if you will. Then go down to the 4, and that's it. Remember, on the 4, there's also a bit of a bigger box there. So ideally, you don't want a box that could do that, because that just seems a bit silly, right? That's not a bad area. That's not massive. That's basically 100 pip range where price is likely to react from. could either be anywhere within that range. Nobody knows where the trade is going to reverse from. All you have to do now is just wait for structure to present itself, because you know the fundamentals is being short. All you're doing from a technical standpoint is finding an entry, because the technicals reflects the fundamentals, right? So if you understand where the fundamentals are going, you know where the technicals are likely to go. So that's kind of where we're at for euro dollar. Very simple, very, very not complicated. I think too many people nowadays need to remember, all these fancy terms to say the most basic stuff. Just keep it simple. Markets are inadvertently, in terms of structure, should be kept relatively simple, but too many people try to just do other stuff. It's just not necessary. Now that's euro dollar. Let's go to GBP USD and just have a little look on how we would present this. So what do? Well, we know we're fundamentally short GU. We have a lot more downside. Our next target for this is obviously 120 and then 118 after that. So we know there's more downside to come. We know there's going to be pullbacks eventually. We obviously it is Monday, it's relatively dead, not seeing massive movers in the markets. Hopefully we should see some volatility pick up tomorrow. But overall, the markets do want to still get short GU, which we do agree with. There's just no reasons for me to be long at this given stage here. So now what do? Go to the weekly. Again, weekly. All we're doing at the moment is looking at order blocks. I'll do like an encompassing thing and adding everything together afterwards, but that's obviously at the later stage of this presentation. But starting the weekly, is there anything on the weekly time frame? Well, there is, but it's going to be mitigated, but there's nothing else here. I don't really look at fair value gaps or imbalances, whatever people want to call it nowadays. It just doesn't work for me personally. But then we go from the weekly. I know I can see some imbalances here, some imbalances here, but it's not ideally a strategy that works for me. Then go down to the daily. Is there any daily order blocks here that we have to consider? Yes. So just get out my rectangle. There's one here. So there's a little bit of a daily up there, tiny bit of a daily there, and a relatively decent region up there. Well, can we trade back all the way onto 126? We need something significant to happen. Right? We need either US data to really start turning. Has that already been mitigated though? It looks like it may have. Okay. I'll mark it out anyway, because still 50% is, I know some people like to look at that. 50% is definitely still something to consider within that. 126 handle looks pretty decent. If we do get a pullback that deep, and we're still short at that stage there, because we could pull back that deep, and then we now switch our bias because something's happened, right? And something significant. So we could do that, and then the markets will do that, and then do that, and trade it back up, and then you obviously wait for targets to occur. But that's what I'll do on the daily time frame. Now, 12-hour. What do I do on the 12-hour? Is there any 12-hour here? It's already been mitigated. Fine. Nothing on the 12-hour really. There looks like there may be something here though. So let's just go down to the 8. 8. Anything on the 8 in the near term? There is this region. So obviously this is kind of a nearer term for an entry. Looks like it's already been mitigated. That's fine. If we do pull back up higher, again, if nothing's changed from a fundamental aspect, this is just presenting better opportunities. On the 6-hour, what do we have here? So if I just move this lower, remember, we're just encompassing that region there. That seems like a fairly decent. Is there any key levels there? Around 124, 123, 500, just below that. So anything on the 4-hour? It's a little bit of a 4, but as you can see, that's encompassed within that. And of course, there is this whole 4-hour here. So that's cool. That's fine. Let me just extend that box just slightly higher. So there is a bit of an issue in my trading view for some reason. On the 4-hour there we go. So if we pull back that deep, there is also a little 4-hour here. So I might as well just mark that level out. There we go. So if we do pull back, our monitor price action sort of there, but ideally that's where we would want to be getting in to GU on a fundamental swing short. Markets may be tactically long like GU, for example, in the near term. We'll just have to wait for tomorrow, because you don't really want to be trusting price action on days when basically nearly majority of the market's on bank holiday, right? So don't put your faith into one-day moves when you see people on bank holiday, in particular like the US or the UK, for example. Markets tend to be slightly devilled on UK as well. But don't trust those sort of moves too much. So that's just something just to note for future. So that's where we're at for GU. Again, nice and simple. All we're doing is finding where is value. And that's all you're doing as a trader. You're finding where trade. Obviously, if we pull back, we have the 4 hour there as well. But all markets are doing is just finding where value potentially lies. And that's it. That's all you're doing for trades. Now, NZD CAD. What are we doing with NZD CAD here? Now, what are we doing? Go to the weekly first. Is there anything on the weekly for us to consider? Well, there's a big weekly here, but that's already been mitigated. There's also 50% of that candle that I know some people would like to trade. That's fine. Now, there is a weekly here as well. Go to the daily. So then we find out, okay, if we pull back, which we are at the moment, what are we still fundamentally short NZD CAD? Yes, given that, of course, there's more issues, let's say in Israel, that's going to pump oil. That should put some downward pressure on NZD CAD because of the Canadian dollar leg. Obviously, them being a big exporter of oil, that's going to increase the demand for the Canadian dollar. As a result, NZD CAD shorts, right? Remember, you're selling NZD, buying into Canada. That's technically you saying NZD or New Zealand is weaker than Canada, which it is from a fundamental aspect. Now, again, all I'm then viewing this as is just a pullback to then go lower again. So that's kind of the thought process you have. Now, we're going from the daily. I don't care if it's breaking structure here or these lower highs here. To me, just short-term rubbish, right? It's just short-term volatility. Now, if we do pull back any higher, again, all we're doing is just presenting value and we're monitoring. Again, doesn't have to hit these levels. You know, all we're doing is just finding where, again, tailing back to that value stance. You're going to hear me say this quite a lot. Just regions where you find price actions relatively decent to a certain extent. Now, then we go down to the 12. Anything on the 12 hour? Well, there was something here. We've already been mitigated all of this areas here, though. So ideally, we want to be looking slightly higher. You know, we're only here. So in the near term, there is obviously 50% of that move that may be mitigated potentially. 8 hour. So there's obviously an 8 hour there that would have been mitigated as well. All of this regions, there's also potentially 50% of the candle, which is roughly like that. So just above the high, I know some people like to, I don't know what this phrase is, inducement, I think people call it nowadays. Just pop above the highs into that 50% of that candle potentially. You know, we'll mark it out. Anyway, it is still a relatively decent area. If we can pull back that deep. 6 hour, we then go down to 6 hours. Anything on the 6 hour for us to consider? Well, there is a one all the way up at the top there. So we definitely mark that out. Remember, all we're doing at the moment is just finding areas where there's been value previously. So we're not going to look at key levels at the moment. As I mentioned, that's going to be in the later of this video. Then we go down to the 4. And all we're doing now is just looking at, okay, is there anything for us to consider within this 4? Nothing really. Nothing in these areas here. Nothing really here. Nothing here. Nothing here. Nothing here. So there's not many opportunities for NZD CAD in terms of clean cut trades, because 50% of this candle, right? It's just, again, I know people like to trade that. That's fine. I'm not arguing against that. 50% is, you know, okay, it could hit it. It could not hit it. I'd like clean cut sort of order blocks. But ideally, as you can see, kind of GU has quite, and so does Euro dollar, has fairly key levels. In terms of Aussie dollar, US dollar, let's just do exactly the same framework. Obviously, we are still bearish this in the near term. Not as much downside, but the downside is should continue if we have rate cutting expectations increase in Australia. And obviously, rate cutting expectations increase into the markets pricing in cutting expectations. That should be a downer on AUD and its rate differentials, because obviously rate cutting expectations will mainly derive from data being weaker, right? Or growth data being weak in this sort, especially in this theme of the market at the moment, which is growth. Inflation is definitely something to consider, but to bring inflation lower from that 3 to 2% handle, you would need weaker growth. And that's why the market shifted ever so slightly more towards growth dynamics rather than inflation dynamics, which was a big driver for literally a year and a bit now. So that's kind of where we're at for AU. And of course, given that the US still has that higher for longer theme, yields stay relatively elevated, cutting expectations get pushed back slightly because of good data in the US. That's all reasons to get short AUD USD, which we do agree with, especially if the Israeli war that's literally just happened over the weekend with Palestine, that does continue to escalate. that's obviously going to be may potentially be some dollar supportive in the near term because of safe haven demand. But that's something we will consider, just the reaction function going forward. So that's kind of the thought process on a very basis term, how you should think about trades. But obviously we teach all that. And of course you can obviously speak to guys who works at the banks as well, which is obviously what we allow our members to do. Weekly time frame, as you can see, nothing on the weekly. So then we go down to the daily. So daily time frame, if we do pull back, now, as you can see, there's a little bit of a daily there. Ideally, it would have been clean, a bit more clean cut. But, we'll have to work with what we got. I mean, this one here as well. As you can see, big daily there. If we can pull back that deep, amazing. But again, we would need to pull back from, literally, if we're pulling back nearly 300 pips, right? That something significant needs to happen. So that will mainly drive from, let's say, really good data in Australia or really bad data in the US. That's literally the only two ways it can go, and that's the reasons why. Or, of course, maybe potentially external issues like China potentially picking back up. That's not really, the markets may not believe that too much, though. Then we go down to the 12-hour. Anything on the 12-hour that I need to be considerate of? Especially we can look to these left bit here. Again, there's a 12-hour there. Also a 12-hour within that. Or just above that, sorry. Again, I wouldn't trust that move too much. If we can pull back that deep, something really has to have been shifted. And maybe that's something you might need to consider in your trade and just look a bit more and see if you may have to switch your bias. And you might just be wrong. You're not always going to get it right 100% of the time. Now, all we're doing here is just finding a 12-hour order block. Can't really see anything here. That's fine. Now go down to the 8-hour. So the 8-hour region as well. Can just monitor that, but it's fairly, what is that? It's not too bad. It's not too bad of a box, if you will. Anywhere within there is also where I'll be eyes on. 6-hour. Anything on the 6-hour? There is here. But as you can see, that's already within the box, which was the 8-hour. So we don't really need to do anything there. So let me actually just make that a bit more clean, because I know some people will moan about that. 6-hour, nothing on the 6-hour. It's all within that region anyway, that's fine. Then go down to the 4-hour. 4 hours encompassed within that. There's also a 4-hour here that's already been mitigated. Even like the 50% has already been mitigated. So that's that technical candle, if you will, has been done and dusted. Now there is a fair amount of so-called liquidity above these highs here that some people will suggest and say, have you thought about that? Of course. So all we're doing is just marking that out. I can't remember where the dollar signs are. There we go. Above there. And as you can see, there's a little 4-hour just above that. So that's a definite region for us to monitor. Is there a 6-hour there? I didn't actually look at that. Yeah, okay, that 6 hours is very small, but as you can see, it's encompassed in the 4-hour anyway. Anything in the 8, there is. So let me just mark that out. Just box it out even more, just so it encompasses that 8. Because I'm sure there's many order blocks, right, that you're looking at. This is just the strategy that I've just developed on my own naturally. It's because I was going down the time frames and just seeing so many order blocks. I'm like, which one do I choose? All right, so all I'm doing now is just encompass it all together, monitoring price action, and then get it in. Because sometimes you just need to pull the trigger. Sometimes if you're a bit too complacent and you're basically, I'm waiting a bit more, waiting a bit more, and then you miss the move and then you get frustrated, right? So sometimes you just need to monitor regions. And if you think you're seeing that reversal happen, you sometimes just need to get in. Obviously with good risk management. So that's definitely something I will consider. If we get above these highs and not seeing any breaks or structures, and the timing from a potential data stance. So if we trade up and we see negative news flow in the US at these stages here, markets probably are not gonna. If we do something like that, right, we break some structure. So let me just delete this again. If we do something like this, where we're trading higher and higher, and we do that, that's technically a break of structure, right? But then you would say, okay, great, that's opportunity to get short, which I do agree with. That's definitely from a technical perspective, amazing. But let's say we do this. So let me just do this. So we do this, then we do this. And then there's negative news flow in the US that battles or fights that high for longer theme, which is the reason why you would be dollar longs from a rate differential perspective. That's obviously going to be down on the US because now it questions that high for longer theme. Timing wouldn't be correct from a data potential stance. So then it will do something like that. And then we'll monitor the data. Obviously, we're not going to cover that today in terms of timing from a data-driven perspective. Obviously, we do videos on that on BMO. But that's not something you do have to consider as well, timing And to time the market, you can never get 100%. But to get an idea of when timing could be potentially occurring, it's just looking at the data, looking at a catalyst that the reasons you would get short is materializing, basically. So let me just remove that. So those are the kind of regions I would be eyes on for AUD/USD. Even from a technical perspective, it's downtrending. Why would you be buying in these regions? The only reason you're going to be buying is if you're tactically going long, which I do agree with. You can trade those tactical plays, but just understand that if the tactical play hasn't materialized into a big long-term theme, then you will need to get out of that long position as soon as and get into a short, because we know the markets want to be short AU. Everybody we've spoken to, the research we've done from our perspective, from reading HSBC's views on that, Goldman's and RBC's and TD Securities, they all do suggest AU should trade slightly lower. But we just have to wait and monitor and see if it can materialize or not. Now, that's kind of where we're at in terms of higher time frame. As you can see, it's relatively simple. All we're doing is finding where value lies. We know value lies roughly within there. We don't know exactly where, and the markets don't know exactly where you're going to reverse from. But what we're doing is finding regions to monitor very closely. We're going to look at, obviously, the next part of the video now. But overall, at the end, of course, we'll do I'll do another technical sort of perspective, add it onto this PowerPoint, not a separate video. And then it will encompass all of those rules. But for now, that's how you do it on the higher time frames perspective, or that's at least how we do it. As you can see, do not overcomplicate it. All you got to do is just keep it very simple and very structured. So that's it for the high time frame. Let's move on to the next part. So as you see, we went over a lot of different pairs, and it's all exactly the same framework. We're going to go over the next points, which you should be adding onto your charts as well, which is psychological levels. I'm sure you might have heard of this before, and it's completely valid. A lot of institutions use this, and it works at the end of the day. So let's start with that. Psychological levels. Next thing we consider when marking out our areas is psychological levels. You may have heard of whole numbers being used by institutions. Example, Eurodollar reacting from the 110 level, or GBP USD breaking 125, so more strength is expected and could climb to 130. We obviously saw that this year, when G broke through 125 and the market's like, oh, we've broken through this big psychological level. The markets are not going to say, from a technical perspective, it looks like this. All they're doing is marking out a level where they might seem a bit of resistance. But their fundamental reason would be like, okay, yeah, we're still bullish it. Where's our next psychological level, which would have been 130. How we implement this in a technical strategy is we look for whole numbers around our region that we have marked out. This is just an extra confluence from a booking perspective. So you might have heard of how institutions like to keep trades relatively simple. So for example, one of the traders we spoke to a few months ago was mentioning to us about how the banks like to keep everything really clean. They want to keep their books very clean. What we mean by that is, let's say you entered a sell on Eurodollar. So you entered a sell on Eurodollar at 108.457. Or would the institution rather, and then let's say you entered at 108.457, and then you exit at 103.318. Now on the phone, you're going to be like, okay, this is what this means, or okay, I've sold it from here to here. Then the other person wants to quickly understand how much profit or loss they're in. Again, if you enter, let's say, at 108,500 and exit at 103 or 104, it's a lot easier then to understand your P&L. And that's what it means at the end of the day. Is you might have seen how it whole numbers. So zeros, 25s, 50s, and 75. So 110, 0, 0, 0. 130, 0, 0, 0. 125, 500, 125, 5, 0, 0, 0. 550s, 130, 7,500. These are just from a booking perspective, and it's very, very key to add into your trading for sure. I use it in terms of, again, like we've mentioned, from a booking perspective, just because it's easy of use. And of course, order flow as well. Markets would react off like 50s and 75s and zeros, as I've just mentioned. But I'd also mark it out on the bigger time frames as well, which we'll go over just now. So this is, of course, NZD CAD. And as you can see, these big whole numbers, all you're doing is marking out regions. the question you have to ask yourself now is, why would an institution push NZD CAD below 80, spot 80? Or why would they push it below spot 8250? Or why did NZD CAD struggle to break and trade way above the 84 handle? There has to be reasons for that. And what they mentioned is here is, okay, we're tactically long here. Maybe, I don't know what's happening during this period, lower oil prices, or New Zealand had a bit of optimism in their data, for example. Markets were trading that on a longer term, on a short-term perspective, and say, actually, we're still massively fundamentally short. So spot 84 is going to need to be broken quite aggressively, and we need that switch in fundamentals to happen for us to trade it higher. And if we're not seeing that, we saw a bit of a move around 84, spot 84, and then a big sell-off, and the markets were still fundamentally short. So to get a break, a close, and it's more downward trajectory for NZD CAD below spot 80, we're going to need a bit more issues in New Zealand. We're going to need a bit more issue, or a bit of optimism, shall we say, in Canada. That could derive from oil, that could derive from another Bank of Canada hike. We'd have to monitor that data, of course, accordingly, and the sentiment. But this is what your thought process. We get to a big key level. Are we still fundamentally short, or are we still fundamentally long? Now, this is euro dollar. So as I mentioned, we marked this out literally or we'd done this PowerPoint a few weeks ago. So obviously price is a little bit off. But 107, always a big key level for euro dollar. 110, 105. We're obviously at 105 now, or just above that. We did break it and close. I went over that all live with you on my highlights. You can go onto my Instagram. It's in the bio or in the description, shall I say. And you can just rewatch that and see our reasonings why we were still bearish euro dollar. We obviously entered, as I mentioned at the start, we were bearish euro dollar at the end of July. It's just all about now is just consistently monitoring. So we got to 107 and we were like, okay, cool. We're still bearish euro dollar. So where's the next key level below 107? It's around 105. We'll go over again this sort of thought process on the live charts as well, just so I can show you. But if you look to your left at around 106, nothing was really there that was appetizing. So all I was doing is just going down slightly lower and saying, okay, we're still a lot more fundamentally bearish. There's a lot more issues to happen in Europe, more optimism to happen in the US. 106 is going to get easily reached. So 105. And we know a lot of institutions were aiming for 105 easily. And we've actually started to see some revisions now from 105 lower because the markets are still fundamentally short the euro. So they're like, okay, 105 is going to get breached and closed and traded below. Where's the next key level, which we'll go over in just a moment. Now let's move on to obviously GBP USD or cable 130. So obviously, for those who follow me, you would have seen how I entered GU shorts at just below 129.5, and we entered here and we entered here. We are obviously holding, our target is obviously 120. This was obviously scrunch up before that. But what we're doing is just trading lower and lower and lower. We got to literally 124 and was like, well, we're still massively bearish the pound. There's nothing going for it at the moment. We're still bullish the dollar. So 122 is our region. We then got to 122. And what we then done was like, well, it's not really getting any better in the UK. Now, where's our target below that? It's 120. We've also seen 118 from institutions, which of course is in the documents that we send to members and all of their fundamental reasonings as well. So yeah, GU, as you can see, just simply 130s, 128s, 125, 124, then 122, then 120. Apart from that, let's look at some examples on the live charts on how we find big psychological levels that all of these institutions are monitoring as well. As you've just noticed here, very, very simple. You do not need to overcomplicate it. You know, overcomplication in the markets is one of the biggest reasons why a lot of people lose money. Of course, having too tight of a stop as well and not understanding where the market actually wants to be driving them, going toward, shall we say. But psychological levels, you might have heard this before. Big whole numbers as you just seen, like 75s and 500s and 250s and zeros as well. So as you can see here, right on euro dollar, where has a key level occurred previously? Now, all you're doing to understand where a key level is just go to the higher time frame. Weekly or daily doesn't really matter. You can gauge what the weekly is doing by looking at the daily, and you can gauge what the daily is going to be doing by looking at the weekly. So it really just depends on what you prefer to use. Daily or weekly, doesn't really matter. Let's start with the daily. Now, all we're doing here is just finding where has there been very large bounces from. bounce there, bounce here, big bounce there. Whereas we basically like support and resistance. That's literally how the markets understand psychological levels. Now, 105, a big clear level where the markets are always talking about 105. And that's definitely something for us to consider going forward. Now, 105, so just do that, 105. Now, where's the next levels? All the way up here at around 110. You don't have to be extremely specific here and say, okay, well, let me just adjust this slightly higher. Let me make sure it hits that wick and it hits this wick over here and make sure it has to hit. No, keep it. Remember, the whole numbers is what you're more focused on. Where's the whole number around this region? 110, 111-ish, where we've seen basically fairly large rejections from. So we know 110 is going to prove an issue if we get up there again. Can we trade above that 110 level? Yes, only if the markets are still long Eurodollars at that stage. Now, 105, is the market still short Eurodollar? Yes. So we know 105 is going to it has been breached. That's fine. We're going to see a pullback, which we are now. Where is the next key level below that? So because we're shorting, we're looking at where the next level is. And remember, all we're just looking for is where has there been bounces previously? A bounce here, a bounce here, bounce 105. Seen a bit of rejections around that 105, so 105.5 level, fine. Bounce here. Where would be the next key level below, for just below 104, 103-ish? Well, parity, of course, naturally, 1.0000 on Eurodollar, parity. So what we're doing now is just doing this. Just make sure. There we go, parity. And where would the next key levels below this? Around here, which is around 97, 98. Again, just look to your right of my screen. You can see that spot, 0.9800 there. Or 004 to be all specific, if you will. And then obviously all the way down here into 96 whole number right there. Can we trade below that? Yes, of course we can. Just look to your left. If we haven't previously been there, then obviously we just mark at your levels again. So if we break below all these regions, where's the next level below that? 95 hold, 94, 93, 92, 91, or 94 and a half, 94, 93 and a half, 92, 93, 92 and a half, 92, etc. You can do stuff like that if you really want to. Now, let me just do this quickly, because this is why I like doing it on the live charts, is because doing it on the PowerPoint is just too robotic for me. I don't want to be an NPC, basically. Now, remember, if you're selling, which we are, or let's look at the buying first. If you're buying up, you're looking for the highs. So previously, you would have seen price action that has made highs here. If you're seeing price action like this, like this, like this, and we're previously trading back up to those levels now. Previously, let's say it does something like this. Let me just move this out of the way slightly. If you've done previously structure like this and it does this and trended down, and now we're retracing back up, now markets, let's say, along that currency cross. Well, you're not aiming for underneath, so that's technically you wanting to sell it, right? If you're not aiming for these underneath bits, you're aiming for these highs. Because you're long, you're aiming for highs, and vice versa. If I just quickly invert, if you're selling, you're not aiming for these highs here. You're aiming for the lows, aren't you? Low there, and a low down there. Those are the levels where the markets will be massively eyes on. Now, how do you use that to your advantage? Well, we know markets like to keep order books relatively clean. You can't look at order books by not being an institutional trader. I know there are some software out there that you can pay that $50. Think about it logically. You're not able to access an order book for $50 a month. That's just not, you just can't do that. So don't get roped into all of this. You just can't do it. It's just simple as that. Now, that's kind of where we're at for just understanding where we're aiming for in terms of key levels, or how we understand key levels, similar to take profit targets, which we'll look at in just a moment. If you're longing, you're aiming for the highs. If you're shorting, you're aiming for the lows. So that's kind of how we identify key levels. And as you can see, all we're doing is just key level down here, key levels down here. Now, these are regions where you go, okay, we're down to 105. if we can break below that, are we still, or the reason we're only going to actually trade below that and fundamentally be below that is, as I've just said, if you are fundamentally short euro dollar at that stage, which we are. So we know 105 is just going to see a bit of a bounce, which you have seen a bit of consolidationary sort of price action, if you will. Not massive bounces that we've seen previously. It's kind of just doubled around that region. Pulling back now, we know we're still fundamentally short. Fine. Where's the next key level below that? Where has the market seen relatively large bounces before? Around that 103 to 102 handle. So that's our next target. If we can break below that to parity, it's definitely possible. But with euro dollar to get to parity, you are going to need an energy price shock this winter to get down to parity. Obviously, I'm short just below 109 up in these regions up here. I took profits at 105. Obviously, I put that on my Instagram. Sorry. Anyway, and then 103 is my next target. Similar to like GU. So now, obviously, that allows us for a GU nicely. So we know GU. So if we're selling, we're looking for key levels. If we're buying, we are going to be looking for the highs. So if we pull back then into, if we're selling, we're kind of looking at these lows here. Remember that sort of structure thing I've made? We're selling now. You are technically going to only be looking for that support that turned resistance previously. So these would be levels where the markets will likely see a bit of consolidation or bounces. And for target wise, it's a bit difficult doing it the opposite way. They're going to be aiming for these lows, right? So this is literally how the markets, most of the institutions would be using their targets. So if you wondered how they actually understand targets and where they place them, that's basically what they do, is they look to the left and say, we're massively still short. Well, where's the lows at? Where's those big lows at? Again, it's really weird doing it the opposite way. And that would be down here. And then if we trade below, that would be down here. And then obviously down here. We're not looking for these regions, remember, because we're not buying. The only reason you're going to be doing resistance now previously turning into a support is if you're buying it, right? You're not buying it, you're selling GU from a fundamental aspect. So that's how you do it. Now, for GU, that's from like a graph perspective, if you will, or a drawing graph. Now, for GU, what are we doing here? So if we're selling it, we know what regions from a whole number perspective, remember, keep it to those whole number perspectives, where does those key levels lie? So remember, if you're buying it, you're going to be looking for those supports or resistance now turn support. If you're selling it, support that turned to previous resistance. Does, though, even better, does these big key whole numbers lie within your regions as well? That's an even bigger confluence there. So obviously around this region here, 126 whole. Well, we've seen a large bounce from 126 whole previously. If you look to your left, yeah, it seems like a relatively key level. Yeah, we've seen some decent bounces from there. So yeah, 126, of course. If we can get up there, markets are going to struggle to break and close and trade above that, because for that to happen, you need something to significantly shift still. That's why you see, I think this is one of the biggest reasons as well, is that people think breakouts and stuff like this occur at these levels, but don't understand that if markets are still short a currency and they're just trading it around that level, they're just waiting for the opportunity to get short again. So they're going to be a bit of consolidation. That is what it is. You know, you don't just say, it's hit this key level, I'm now buying, or it's hit this key level, I'm now selling. You're just waiting for structure to present itself. So you do exactly the same framework here. Now, we've seen here previously where we've seen a bounce like this before. So that's definitely something where I will consider. Again, it's completely kind of opposite in terms of like what I've just shown you, but it's from terms of market, the way the markets are operating at the moment, the sort of order block strategy is not working. This is why as a trader, you need to be dynamic, is because obviously we've seen a structural shift in the way the markets are looking at. So I'll definitely mark that out. Again, it's not a way I'm saying, okay, we'll get into there. I'm just selling at the moment it hits it, or see a bit of reversal. I need to see some breaks on the lower time frame before I get in, which obviously we'll move on to in just a moment. Now, that's kind of a psychological level. If we can trade up to that 126, if we trade below that now, again, look to your regions of entry and also look to your regions of exiting. Well, 120, just below that, as you can see, 120 whole. Where's below that? Where have you seen large reversals from? 118, as you can see. And that's why sometimes you've seen where like Nomura Bank, for example, or Nomura International, right? They've adjusted their moves, as you can see anyway. 120 is big from a previous historical stance. Then 118 is kind of near term. 118 is a level that Nomura and HSBC are aiming for shorting GU. Obviously, we know the fundamental reasons, and they've explained that to us. But all they've done is just looked at the lows and think, okay, that's where it is. If I'm selling it, that's where another key level is for regions to significantly break and close above that and trade higher. Something needs to happen. That's kind of where we're at for GU anyway. If we can trade, we will likely trade above this if the price action continues. But again, there is also another level in there. There's 124 as well. You can also aim for near-term structure. 124 is also going to be from a clean order book stance. Then, of course, if you're selling it, you're then just trading toward the low here and then another low down there. If we can trade below this, where do you think I'm aiming for? I'm not aiming for... where's the dual drawing tool? I'm not doing this. All these highs up here. We've seen a bit of... you're only aiming for those highs if you're buying. You're not going to be... If you're fundamentally short, you're not going to be buying, are you? So you're not aiming for 116. You could be aiming towards 115 to 114 for GU if we can trade below that. And if the markets are still fundamentally short GU at around 118. Now, that is definitely possible. We just have to monitor when we get there. So that's something to consider just going forward anyway. Now, let's move on to AED USD. Do exactly the same framework. If we're shorting, are there any key levels in our regions first? Oh, well, if we get into this region, 165.5 seems relatively decent. You can kind of see where the markets are struggling to break around above that 165 and close above that. So it's definitely something for us to mark out. Now, above that would be around 165, 750-ish, 165.5 for sure. Zeros, 25s, 500s, 75s. And of course, it then goes back to zeros again. So 165.5 to 165.750. Okay, so that's from a psychological level, how a numbers that fits in with your strategy. Remember, this is why I'm saying every strategy works, because if you didn't even look at order blocks, right? If we traded above here, that's the regions you're going to be looking at from a psychological / support and resistance perspective. If you're selling it from there, we've seen previous support turn in resistance. Well, you would say, it took out the highs, took into this area of liquidity, and it's taken out this order block. Well, if you were a support and resistance trader, you would have been looking at that region anyway, right? So who's right and wrong? Nobody. And this is why sometimes, remember I was mentioning about how people, or from what I've noticed anyway, is a lot of retail traders tend to take a lot of losses because their stops are slightly too tight. So this is why sometimes you need to widen them just so you can encompass volatility in your trades, right? You can't like argue and say, I need to really have a tight stop loss when market conditions are very volatile at the moment and certain pairs are very volatile. You can't argue and say you need to have a small stop loss. You just, again, it's just stupid. I wanted to try and set nicely, but you just can't do that. So again, this is why I'm saying every strategy works in their own way, and this is why I'm morphing different strategies together just for what works for me, really. And this is why it's important to understand multitude of strategies and see which one works in certain environments, see which one doesn't, and then you can always be adaptable. Eventually, this might change, and they might need to see what is the actual driver of how that market's working at the moment. Now, yeah, that's kind of where we're at. And if we're selling it, remember, so we look at our levels for entries. So big psychological level there, around 165 holes. Let me actually just adjust that. 165 hole. And then, of course, above that will be around 165, 500 to 165, 750. Now, of course, we can trade above that. Where are any regions in 167 is kind of a level there. Then also just look to your left just to make sure. It's 167 being a level where the markets have seen big reversals of or bounced from numerous of times, which as here. Of course, we breached below that because the markets were short AU at this stage, and of course, COVID, bang, dollar obviously strengthened in that environment because it's that safe haven. We saw some consolidation here previously. Bang, it's kind of just bouncing and bouncing, bouncing and bobbling. We've seen a big reversal here, and it's, if we can trade above that, then of course 168 is another big level from previous near-term structure there. But then that's what we're doing there, and of course we're selling it. So where are our lows in this market? Down in here, and down in here. Well, can we trade kind of 163? Have we bounced from 163? I think we might have. Yeah, 163 we have bounced from. So we have bounced from that low. That all depends now if the markets do want to be long AUD USD. It seems unlikely, just given how sort of the perspective in China is doing. They're not exactly recovering aggressively. Australia's data is literally teetering. Market pricing is relatively suppressed. And if that does pick up, as I've just mentioned, that is reasons to get short AU. And of course, dollar high for longer theme is the driver of dollar strength. That can, of course, switch if the growth data in the US starts to switch. So far, we haven't seen that. So there's no reasons for me to say, okay, there's no reason for me to argue and say, yeah, I actually do need to start now selling the dollar. Obviously, getting into AUD USD longs. Just for me, it's not. I could get wrong, but, we'll just wait and see, really. Then 63, and then, of course, 62 around those lows there. So now let me just do that. There we go, 62. As you can see, that low there, and then that low's all the way over in there. That's the region. Can we break below that? Of course we can. All depends if markets are still fundamentally short AUD USD when we get to that region. If we start to see switches in data, that's when you start to see reversals. So then if we aren't, let's say that we haven't seen reversal, well, that's obviously the low there. Well, where's the next low below that? 160. This is how simple it is. Do not overcomplicate your charts. This is one of the biggest reasons why markets, a lot of people lose, is they overcomplicate and think they need to use all these fancy terms to pretend how they just know. Just don't overcomplicate the charts, please. So that's it for AUD USD. That's kind of where we're at. So we bounced from 165 relatively enough. If we can and break above that. I know some people like to look into liquidity. And there is an 8-hour order block, sorry, just above that. I thought I marked that out. I might have deleted it by accident. But as you can see, just above that is an 8-hour. I think there's also a slightly lower time frames. And a 4-hour, wasn't it? Yeah, the 4-hour within that 8-hour, which is nice. So we can't break above that. As you can see, once spot 65.5 to spot 65.750, we have seen some relatively decent price action from those regions previously. It is within our whole number perspective. Remember, we were speaking about at the start about the way the markets like to book their orders. They want to keep it relatively simple. They're not going to aim and trade from really weird 166.32 through or 303 or 333. They're going to try and aim for those spot 66, spot 66 250, spot 66 500, spot 66 750. That's of course if they are selling AUD USD. Now NZD CAD, very briefly. Again, it's just very simple. All you got to do is do exactly the same levels, where this 82 handle is around our region that we've marked out. As I said, NZD CAD's a little bit choppy, so I'll definitely be a bit careful entering that. But if I am to reflect, especially given the way the issues are in Israel and Palestine at the moment, obviously NZD given being a risk-on currency, CAD of course being a risk-on currency, but this is why you have to think about the condition we're in. The way, of course, with Iran, and think about what happens with oil whenever there's stuff in the Middle East. Whenever there's issues in the Middle East, you tend to see oil rally because of supply issues. So maybe, pipelines get burst and they get damaged, or factories or refiners get damaged based on the war. There's a bit of bottlenecks in some of the supply chains because of what's happening. That's all reasons why oil should rally. And that's why if I am to reflect NZD CAD as a short, I would reflect based on oil rallying on worsening or escalations in Israel and Palestine. So that's kind of how we do psychological levels. Very key, very simple. Do not overcomplicate it. Remember, if you mark out a region, like what we was doing on Euro dollar, if you're marking out regions here, Are there any levels within your region? Well, there is. As you can see, 107-ish to 106.5 lies within these regions. Can we trade into that? 108, just above that. So I'll definitely mark up 108 for if we trade into this. 108. And then, of course, within this is around 106.5 to 107. And then, of course, I'll just be monitoring those levels there accordingly, just from a booking perspective. And of course, there are other opportunities up here. As you can see, 110 would be that handle where the market's. This is, of course, if you're looking to get short. Remember, if you're just think about like a support and resistance. That's all you're basically thinking about when you're marking at psychological levels, support and resistance. Go back to that third slide where I was showing you the technicals. Look how simple they kept their technicals. They aim for those lows there, and that's their targets for shorting. Of course, they're buying. They're going to be obviously aiming for the highs. So that's kind of where we're at for psychological levels. Very simple and not overcomplicated. Let's move on to the next part of the video. So, as I've just shown you, very easy to find psychological levels. All you got to do, just start on that high time frame, look to your left and see where has price reacted from quite aggressively. Now, obviously, there's going to be certain levels which hold and certain levels which gets broken. And that's because of a fundamental reasoning. That, remember, your technicals just reflect your fundamentals. If you understand where the trades could go based on what the Fed's doing, what the ECB is doing, what the Bank of England's doing, based on the data, growth data, the employment data, the inflationary data, and you obviously encompass risk sentiment and everything within that, what yields are doing, what spread between the 2-year gilt versus the German Bund. Again, these are all just adds. These are just like sprinkles on top of an ice cream. Just helps to maintain that status quo. Now that we've found psychological levels, nice and simple, do not need to overcomplicate it. How does markets get price targets? Have you ever wondered how, HSBC or RBC Capital, Goldman, or whatever institution you like to read up on, why do they say it's going to trade? How do they get that level? And there's really, really simple ways to do it. And I'll show you the ways that we know and who we've spoken to. And this is what they've told us at these institutions. Setting targets for your swing positions are pretty easy. First, you need to have your fundamental bias to understand how much more downside/upside you have. For example, for the UK, if the UK data turns a lot more negative, we're at GUs like at 122 something at the moment, or just below that. Now, well, if the UK data is only starting to turn and the US stays resilient, then clearly 120 is going to get breached very easily. Then you say, okay, based on that assumption, where's the next level below that? It's 118. And then can we go below that 118? It's entirely possible. All we're doing is just keeping up to date with the fundamental bias. Now, from there, you just mark out your key levels and there's your target. Very simple. We have an open TPs. So this is how we do it. We have open TPs, meaning we don't take all of our position off the moment it hits this region. So for example, euro dollar, we sold euro dollar at just below 109 and we exited some of our position at 105 and we're still holding that because we see more downside for euro dollar. So obviously like a partial, if you will. We have open end, obviously TPs, and we monitor the fundamentals of the currency to determine if it has more room to run. And if it does, then the next level, next key level will be our next region to monitor. So again, all you do with your regions, all your technicals, right? Remember, your technicals reflect your fundamentals. If you know where your fundamentals are going, your technicals become way easier because now you're not guessing where the market's going. You're not guessing what's happening. You're in flow. And once you're in flow, it actually becomes fun in a way. So again, it takes time. And, if you've got to this far in the video, I'm sure you'll be up for putting in the work to fundamentals, right? But I'm sure you're at a conjunction period now where you're like, oh, well, I know everything with technicals. Surely this can't be it. That's what I got up to. Where I was like, well, I know pretty much what I need to know with technicals. Surely it can't be like this. Surely the guys at the institutions, they don't just look at their charts all day and think, okay, great. Remember, not every trader at a bank is a market maker. So how will they, when people say, banks are there to get you, there's only a very select few banks that are market makers and only a select few of traders are on that team. Everyone else is trading on behalf of clients. They're doing their own, the money within the bank. So all we got to do is just figure out how do those guys do it? We're never going to trade like a market maker because market makers have the full position on either direction, right? You're not going to be able to do. You're not going to do that. You don't have enough money. Neither do I. Neither does anybody else on YouTube. You need absolutely billions and billions and billions to be able to do that. So we just have to think, how do these guys on the desks who's trading at hedge funds or trading in that on behalf of clients, how do they do it? So again, we're going to show you now on the live chart how we get those price targets. Now, price targets. I'm sure you might have seen, how do institutions say 105 for euro dollar or 103? And there's a couple of ways they do it. Firstly, they might look at rate differentials. They might look at yield differentials and say, based on pricing alone, the relative rate pricing, the euro dollar should be trading a bit lower based on that perspective there. Obviously, we made videos on that, so a lot of institutions tail back to this in their research documents that are written up. And of course, when we speak to the traders as well, they all mention about what rates are doing. But again, that's much for a later video. I may not do that video on YouTube. It is on our website though. But how do we get price targets for euro dollar? Now, I kind of spoke about it previously literally just before this in the psychological levels. Now what we're going to do is just look at targets. We're not looking at it in terms of entries, just exiting positions. Now, let me just quickly remove this for now. Similar to price targets, you're just aiming, if you're selling, remember, if you're selling, where's my little drawing tool? If you're selling, all you're doing is aiming for a low. Lows down there, lows down here. So it would be doing something like the price action may be doing something like this. So if you were selling it from these regions and you're fundamentally short, well, your first target is going to be here, right? And then your second target is going to be down there. Now, of course, you wouldn't know how far it's going to go unless you understand what's happening from a fundamental aspect. From a technical perspective, you can't gauge how much more downside there is. This is why it's important to understand what is driving the currency at all given stages, because you understand how much more downside is going to occur. If there isn't going to be much more downside, this is why with Aussie dollar, US dollar, there shouldn't be too much downside because, again, we are maybe starting to see a topping out in some of the US data, but it all depends if that supports the higher for longer theme or narrative. So that's something to consider. 62 is that level there for Aussie dollar, US dollar. For euro dollar, of course, that's kind of what we're doing. And if you're buying it, so let me just quickly invert it. Well, if you're buying it, obviously it's previously gone down from a downtrend to an uptrend. You are not targeting these levels that you may be seeing there because you're only targeting those levels if you're selling it. Well, you're not fundamentally short yet. So why would you be aiming for those? You're just kind of undermining your targets a bit. Again, you can. I'm not arguing against that. But I'm just showing you how most of these institutions use the targets. And it's just so simple. As I mentioned, they may use like equity-driven price targets, which is definitely something to consider in your trading. They may use, for example, yield differentials as a way of targeting price targets. For example, like JP Morgan, they are targeting around 102 for euro dollar based on yield differentials. We would need a pricing of around 40 basis points in favor of that spread between the German 2-year Bund versus the US Treasury 2-year or the US 2-year yield. We would need at least a 40 to 50 basis points yield suppression in favor of the US for a 102 handle for euro dollar. That was based on what JP Morgan was stating, which we do agree with. Again, we explained what that means to our members and show them how to do it. But remember, that's literally how you're targeting the markets now. Now, of course, if we sell in our regions, all we're doing is just looking and seeing, okay, where is the targets going to be? Well, if you're short, you're going to be aiming for the lows. If you're buying, you're aiming for the highs. So in this example here for euro dollar, we're buying where we're aiming for. Now, you can do something like this, where you can actually just make it a line and see where there's been bounces. Little bounce there, little bounce there, little bounces within this if you were selling it. Now, as you can see, even on the line chart, it's very clean, very, very sort of that one there. Oh, sorry, I got my fib up by accident. That one there, that one there, down there, down there, down there, and down there. There's going to be significant reasons for us to trade down into that 96 handle, 98-ish handle. But for now, all we're going to do is focus on our near term because we don't know what's going to happen by the time we get down there, right? Or by the time we get down to 103, 102, something significantly can change. So just thinking of a 3 to 6 month horizon. But yeah, a lot of people do agree with that we can trade lower. Just a matter of finding an entry. And of course, the exit strategy is pretty simple. So all we're doing is aiming for that low down here as the near term. So around 103-ish. Can aim for 103, 250. I'm not going to argue against that. 103, 250. And of course, 102, 500. Just round it up. Could be regions there. But of course, if you just go to that candles, again, it's up to you how you want to do it. But they all lie within that region, right? It's 102, just from a big whole number perspective. 103 first. Then, of course, 102 whole are levels for us to consider for sure. There isn't here, as you can see, there isn't anything at 104. So if I put 104 here, as you can see, nothing's there. So we're not really aiming for 104, are we? We're aiming to the lows. 103 and then 102. There. So that's literally how you do it. And that's how most institutions do. And of course, parity as well is always going to be a level that, regardless of what price action's done, is going to just be a level when markets are very hesitant to trade toward. And of course, now leading on to GU, do exactly the same framework as we've spoken about before. 120 is that low down there. 118, sorry, is the one just below that. Well, where's the ones below that? Lows down at here at 114-ish. Just round it up to the next whole number. Then 111 and a half to 112 for sure. You don't have to get instantly to the low. Just where is key levels around that region there? It's not about getting precision because everybody will draw it slightly different, right? People will aim it for the close or the open. People will aim it for the wicks. And then you're going to get kind of wrong-footed where if you're aiming for the wick and we just missed the wick, you might be like, let me just hold it to then we then hit that wick. I'm sure you've done it before where you try to become too, what's the word I'm looking for? You're trying to become too accurate and you actually miss out on a lot of like yield on your trade. Just don't try and overcomplicate it too much here. Now, yeah, 120 to 118 is definitely regions for us for euro dollar. Aussie dollar, US dollar, similar scenarios where the lows down here at spot 63. Markets are short still, but we know something can happen literally tomorrow and the markets may be now long Aussie dollar, US dollar because of maybe something's happening in the US, for example. But until that happens, we don't know, right? So we just need to just go with what we know at the moment. So yeah, markets are still fundamentally short. So what we're doing is just monitoring our region here. 165 here, there. One spot 64500 is within that area. Of course, just above that, a nice big 8-hour order block with around spot 65 to spot 65 750 levels that we've seen large bounces for previously. That's moving it from a whole number perspective in terms of entry. Now, in terms of exit, is 163. Cool. We're still short this, so 162 is the level where we're going to struggle to break. If we can break below that, we are going to need, or for us to actually trust the break, because we might see bounces like this, and it does like this. We know people are definitely going to be selling it, but we're not like that, right? We are a bit more clever, if you will, a bit more smarter. So as a trader, all you're doing, getting it down to that spot 62 level. We might do that. Don't get fooled by it though. If only understand that if the markets do want to still be short that, we are going to need the confirmation from the fundamentals. That's meant to be an F from the fundamental perspective. If we haven't seen that, then yes, spot 62 is the bottom of that market. Until we've seen that switch, again, the markets are going to be still shorting it to the next level. Now, let's say we do start to see something switch at spot 62. For example, I don't know, let's say the US's data starts to turn, growth dynamics begin to move in favor of Australia, maybe because, again, growth dynamics is just a fancy word of saying sort of difference. And the difference in that might be because the US's growth is really weak now, and we start to see that substantially fall. Markets begin to price in more cuts for the US dollar. That then battles the higher for longer theme, which is the driver of where the dollar is going at the moment. And as a result, that's a reasons to get long, because now that theme is being battled. Fine. Until we see that, nothing's going to happen. So we'll get down to spot 6.2. We might see that bounce. That's when you wait for that break, wait for the pullback into a region, long it to then the highs. The first high will be here. Second high will be here. Third highs will be all in these highs here. If we trade above that, the next high will be above there. And then that high up there. And then look to your left if we're still long it. There. Oh, sorry, my lines aren't exactly the straight. All within these highs here. If we trade above that, high all the way up there. That's literally how you do it. If you're longing it, of course. That's not reason to say, okay, we're here. Now let me sell it. Well, we're not fundamentally short. We're long. So why are we looking to sell? This tails back to understanding what is driving the market and for what reasons. Again, that comes with time. So that's how you do price targets. Very simple. Do not overcomplicate it. We're not going to look at yield dynamics today. So that's it for price targets. Let's move into the next phase of the video. So as you've just seen, very simple, very easy. Remember, trading shouldn't be that complicated. It is obviously very, very difficult. However, I think too many people nowadays needs to put, like I mentioned at the start, they need to put fancy terms on the chart, when in reality, it just doesn't work like that. So now we've gone from working out high time frame analysis to then going down to psychological levels. How do we mark out psychological levels? We're then gone down to how do we understand price targets. Now what we're going to be doing is the lower time frame stuff. So I'm sure this is what a lot of you who are watching this today do quite frequently. This is just our way of doing it. Remember, there is no right or wrong answer. Every strategy is different, right? Every institution trades slightly different. For example, HSBC looks at key levels and say, okay, anywhere within here and here, we're looking to sell. And then they're just sending it to the next level. RBC Capital Markets, as you just saw at the start, they use a bit of moving averages. They use very simple lines on their chart just to see where levels are. Bank of America, their trading team uses MACD, and they use very simple technicals on their lines on their charts. Remember, all of the directional bias comes from understanding the economics as to what drives currency. So now, enough babbling on. Let's move on to lower time frame analysis. So again, this is just our way of doing it. There's no right or wrong answer. But once we see a reaction out of our zone, that breaks some structure, we then go down to the lower time frames and monitor any pullbacks. So similar to here where we saw this big move here, you could have traded a 2-candle swing on this strategy here. Okay, fine. We're not going to go over that today. Again, if you do want that, please put 2CS, so 2-candle swing, in the comments, and we will create that video for you, because that is another entry strategy that might work for you. We obviously just wait for the breaker structure. We then wait for a pullback into a region that seems relatively decent. Similar scenario where you go from the hourly down to then the 45-minute, which we'll get into in just a moment, etc. Personally, don't go anywhere below the 15-minute. This is just our reasoning. I don't like doing it. It just becomes too choppy and too messy. And yeah, it's just not worth it for me anyway. What's the point when all of my reasonings has come from fundamentals, right? And more will be explained when we jump onto live charts, as we know. Now, lower time frame analysis, obviously we'll go from the week. We've gone from the high time frame down. Now we're looking for that lower time frame. So some people aren't as aggressive when trying to enter the markets. We know some traders who will just sell/buy the currency the moment it hits our region. In our view, this is too risky and you need an entry strategy. Remember, you're not trying to guess when the bottom is. Nobody knows when the market's going to reverse, right? So this is when you use a bit of everything, a bit of technicals, a bit of fundamentals as well. You can understand timing when markets may want to jump back on board. For example, the issues with, let's say, I don't know, why CAD is so weak. Obviously, as I mentioned, we're recording this on the 4th of October. CAD's so weak because oil. CAD is following the commodities pillar at the moment. So meaning it's following what oil was doing because it's a massive net exporter of oil. Well, if oil starts to recover and we see some bullish, let's say, reasoning and fundamentals jump back in, then, yeah, that's us timing and say, okay, we need to look for an entry now, really, really soon. But as we mentioned, it's too risky and you need an entry strategy. Pullbacks will always come, so why rush to get into the trade when you're risking your own money? To me, that makes absolutely no sense how people can do that. How you rush into a trade, you get emotional, when in reality, you've seen it time and time again. There's always going to be pullbacks, whether it's a really shallow pullback, whether it's a really deep pullback, there's always going to be a move, pullback into your region. So why are you rushing? It's your money you're risking at the end of the day. And this is why to us, it's wise to wait for price to present itself. Although it's a shallow retracement in this example here, we still waited for price to break structure before looking to enter. We will show other examples in the live chart. So I'll show you some euro-dollar examples as well. When we were bullish euro-dollar throughout this year, we entered at 105, we entered at 107. I'll show you how we got into that thought process. Now, moving on from the 1 hour, all we do is the next time frame, which is the 45 to 30 minute. You can gauge what the 45 minute is doing by looking at the 30 minute and vice versa. You can gauge what the 30 minute looks like by looking at the 45 minute. All we're doing here is just trying to find a little bit of an order block to get in. Similar to the high time frame, all we're doing is just finding a good region to watch. If you see some rejections out of your lower time frame region, then that's an opportunity for you to get in. Technical strategy wise, use whatever you feel works for yourself. There is no right or wrong answer. As shown in slide 3, institutions use very simple technical analysis to get into a position, but use fundamentals to determine where and what trades to take. Because remember, you don't always have to be in a trade. If a trade isn't presenting itself, then naturally, if a trade's not presenting itself, then you don't get in. Why rush a trade? Why risk your own money because you feel like you need to be in a trade? That's not how you should be trading, in our opinion. So, of course, we'll go over other examples in just a moment. But now, let's look at some live charts. Let's look at lower time frame analysis. So I'm going to give you some examples, and we'll look at some other examples as well. I'll draw some lines just to make sure you can, just from a visual perspective. Firstly, let's look at euro-dollar. So let's start with euro-dollar, and I'll show you an example where I actually entered some trades here. What I did for euro-dollar was this. So let me just delete this quickly. So we're looking at more of this region here. So we know at this stage we were long euro-dollar. So let's just ignore this. So let me actually just replay this back just so you can kind of see it slightly better. So what I was doing here is, okay, well, I'm still long. So this is my thought process on how I did it. So what I did was this. So I saw, okay, well, I'm still fundamentally long. Markets are going tactically short euro-dollar in the near term because markets were pretty stretched in terms of positioning. And we then saw a little bit of weak data in Europe, and that created that pullback. Fine, amazing. That didn't change the overall view, though, for the market at that stage, though. So then what we did, it started on the high time frame. We then went to the weekly first, marked out my weekly order block. So I was doing this. I went on our live breakdowns we do twice a week. This is what I did for that as well. We encompass the technicals and fundamentals together. Went from the weekly then to the daily. Anything on the daily, not really seen too much. Nope. I was then at 12 hour. Is there anything on the 12 hour for us to consider? Well, this 12 hour area there has a little bit of a region for sure. So let me just encompass that box there. There's also another region within this level here. So I was definitely marking out that region. Remember, I'm only going to get in until we start to see either a 2 candle swing, which as I mentioned is not going to be in today's video. We're looking at breaks of structures at the moment. But as I said, if you do want that video, just let us know. Then I went down to the 8 hour, exactly the same framework. A little bit of an 8 hour there, 50% of that candle there. Well, we know the markets are long this. It's just a matter of finding and timing. Finding and timing, that's a pretty good phrase. Around 50% is there. We did see that bounce, but we didn't see no structural breaks yet. Now, is there anything below that? There is there, but that's within that region there, that's fine. Then went down to the 6. Anything on the 6 there is there. Kind of encompassed within that, this 6 hour here though. It's kind of encompassed into that range though, so that's fine. Let me just, I know people are going to moan and say I need to be specific, but drag that long. There we go. So anywhere within there is where I'm waiting for breaks before I'm long again. We know the markets do want to be long. It's just a matter of finding an entry. Now, those are kind of my levels that are marked out. And then I was just waiting for structure. So let me just play that until I see break. Cool. So now we got to around this region here. Now let me actually go down and slightly see. This is the level I marked out. But I just want to see if there was something on the lower time frame that we must have. Why did it wick from around this region though? 106.5. I mean, there is 106.5 there from a booking perspective. Fair enough. Yeah. Okay. But I wasn't looking at that at the stage though. So I just want to see the actual reason why it wicked into there. So 6 hour. I just want to see if there's any order block within here that I just missed by accident. There isn't, not that I can see. No, I wouldn't have looked at that region anyway. Yeah, there's nothing I can see. We haven't broken anything until we haven't technically what's it? That order block is still valid until we kind of break and close all the way all over it. So if we break all the way down below that, that's invalidated. Because I know some people like to do something like this, which is fair enough. That's actually quite a good idea though, where they encompass all of it. And that region there, which as you can see, it's held. So that's fair enough. I've always done it where the open to the close. That's how I've been taught. But I understand recently where we've kind of wicked out of. Sometimes you might see it wick out the actual wick and miss the open. I have missed trades based on that actual reason before. So yeah, I have kind of just switched sort of bias, and I might actually do a bit of a switch as well. But overall, yeah, I was looking at this region. We know it's not, that order block is still valid until we kind of break all the way below that. But we didn't break below that, which is amazing. Then what I did was drop to lower time frame until I saw that switch, which occurred there. Break a structure there. I don't care if it's changing character. Break a structure. Now, wait for the pullback. Well, what do we do with the pullback? We do exactly the same framework as I've just went through. Go down the time frame and wait for structure to break out of our region. Well, technically, yes, breaker structures occurred here and here, right? All these structure got broken. Fine, amazing. Well, wicks out of here, people would have got short there, but then got absolutely battered on the way up if they're holding it for that long, because the markets are only going to get massively short there if they're massively fundamentally short, which there was no reasons for that to occur during this stages there. As you can see, during all of these levels that are marked out, we didn't see no breaks of structures. In this level here, we saw no break. The structure would have been broken there. We sort of created a key level there. Whereas the next level for the markets to trade from, likely, it's going to be down here. We then created a double bottom. We actually wicked below that. It's fine. Well, ideally, I wanted to trade into here, which we did. We did actually wick into this region. We did trade above it, but the issue is a wick, and wicks aren't too great for us to trade. And as you can see, this is a clear break above that. So this is my thought process. Again, I went over this in the live breakdowns anyway. And then 4 hour here, and then all I've done is just drop down to the time frame. Well, doing exactly the same framework as the high time frame. Marks out my region here. There's also another level down here that I was a little bit considerate of. But ideally, this is in my region. We saw some breaks here. A breaker structure. Here. All this structure got broken. Nice clean break. Bang, bang, bang. Got into that level there. And then got long here. Stopped below the low. Below the wick low of that candle. Which was all the way down. Where were we? That 12. It was all the way down in below the low. Technically, I actually put it below this wick low down here. Put it down these lows here, but then I also noticed actually my stop is below this wick low here. But in normal market conditions, you would put it below the low there, because if we broke below that, it's going to go to the next key level, right? So again, slightly wider stop than most people, but my target is relatively high, right? So here, people will laugh, right, at this kind of 50 pip stop, but my target is way above there, so no one's really laughing now, are they? So that was my regions there. That's all I did on that lower time frame. Was, again, go to the lower time frame, the hourly, the 45 minutes, the 30 minutes. You can gauge what the 45 and 30 minutes by going to their respected regions. So if I just continue. There we go, these levels down here. Bouncing, 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 bouncing. And then, of course, we're trading back up again. So I didn't move my stops until I saw some nice big bullish price action, but my wicks all the way below the lows, right? So it's all well and good. I know some people like to put it just below this low here. Again, it's up to you, but I've been burnt a bit too many times by trying to have too tight of a stop. And there's a lot of traders we've spoken to where they're saying one of the biggest reasons why people lose money is because their stops are too tight. And this is coming from the guys who works at the banks, right? So if you want to trade, and I know people like to say trade at the bank, you need to actually speak to them and understand how they think, right, before you can gauge that. And they all use fundamentals, by the way, and their technicals are very, very simple. They actually don't even use order blocks there. Remember, not every institution, there's very select few who's market makers, so who can create those order blocks. All the other traders are just there, and they're just trading what they're seeing, right? So they're going to be looking at the same regions as us. They're going to be looking at the same fundamentals as us. It's just a matter of how we can interpret that. And that obviously comes with patience and experience, but that will come as long as you are consistent. Now, that's what I did for euro dollar. That's how I got in at that 10 that region there. You might have seen it on my Insta story. I've posted it a few times. The minute we then obviously peaked up there, then we then turned fundamentally short euro dollar. That's how we did it. Again, not very difficult, is it? All you're doing is dropping down to the lower time frame. Similar to here. Let's say we are fundamentally long euro dollar now. Well, what structure do we need to break before we kind of look for an entry? Technically, this one here, right? The lower high, the high of the move, that near-term move there. 1 hour, 1 hour. Also, a little bit of move there. You can consider that. But overall, we need some structural breaks first. So as long as we fundamentally long euro dollar, that's what we'll do. If we do like that, as I mentioned previously, if we're short this, which we are, this we're not caring about because there's opportunity to get short again all the way down. So that's kind of what we're looking at. If we do break above those highs, amazing. There's more reasons to get short. But overall, that's what we'll do. If we've done this and then this, what do we do now? We're now waiting for our candles. So we'll go to the hourly. It's a bit difficult because of this price action with, of course, what's happening in Israel at the moment. But of course, if we can trade back to the lows again, and we know we're long, that's going to be our regions, right? You're not always going to get every single trade correct. But as you know, if you think about your trades on a 3 to 6 month horizon, and everybody agrees with you, remember, do your fundamentals first, get a bias. Based on all this, I'm long Eurodollar, or I'm short an entity CAD, for example. Then what you do is you then go to your technicals and only look for that bias. Trading against that bias is risky unless it's a tactical play. So something new may have occurred, data stance or something happened. For example, in Israel at the moment, markets are tactically trading oil higher. Now, that's, again, all reasons. But let's say we then get into here. We trade above that. We then trade below it. Again, it's a bit more of a difficult example because we are seeing some really bad sort of price action here. But then let's say we do that. Again, kind of this region's down here. If we are buying it, or these regions down here, you could go to the lower time frame, 30-minute, 15 potentially. I wouldn't go any more below that though. But notice how I'm not going down to the 15 or the 30 or the 45 or the hourly to find the higher time frame order block. I stop at the 4, wait for breaks of structure out of the region. Then, okay, great. We're seeing some structural breaks. Yeah, this is our direction fundamentally. Okay, great. Let's just now wait for that pullback into this region. Seems relatively decent. Where's the wick low? Let's place the stops just there, or a few 5 to 10 point pips below that. Again, it's not specific, so I chop and change. It might be a couple of pips, might be 5 pips. Depends on the volatility of that trade at the moment. And of course, how confident I am as well. And then we aim for the highs because we're buying. If we're selling, we're aiming for those lows. We're not aiming for those supports that we're aiming for because we're not buying, we're selling, right? That's how the institutions do it, if you've ever wondered how they have. They do have, as I mentioned, price targets as well, but from a very simplistic perspective, that's how they would do it. But yeah, that's literally what I'll do. We break for the break above that if we are long, of course, euro dollar, which we're not. But if we were, a break above that. Let's see if we have any order blocks after this stage is here. And then we get long again. Similar to here where markets may have seen all of this moves as reasons to get long. Some people, oh, look, break a structure. Technically, yeah, that is some structure there as well. Technically, yes. People would have got up and got absolutely battered And they would say, oh, market manipulation, people trying to take me out. No, institutions don't care about your stop loss trim. The liquidity of the retail space is so small, it actually costs a lot to take people out. So they would rather focus on their institutional clients and their cross-border sort of payments, because they are a bank at the end of the day, right? And that's where they make the most money. But yeah, that's kind of how you view. We'll get into those in a potential another video if people want it or not. But that's literally how we do it on the high time frame perspective. To then the lower time frame perspective, and it's something just to. This is our reasons of technicals, though. Everybody's going to have their own regions and their own reasons for technicals. But what's most important for you to note today is there is no right or wrong answer with your technical strategy. Everything works. This is something we've done and we've developed over a few years. I've been training for 5 years. Drew's been training, I think, for 7.5. I can't remember off the top of my head. But a long time. And this is just something we've developed for literally over the last sort of 2 years now, since BMO. So it is something that worked for us. It may not work for you, but I'm sure there's some stuff in here that you may take away today. As long as you've learned one thing, that's really all we care about. So that's it for the lower time frame. Remember, start from your high time frame, find your key levels, then go down to your lower time frame, then look at some of your regions. So just to summarize how we would do everything together, start with euro dollar. So with euro dollar, firstly, what we do, there's no right or wrong way of doing it first. So what I would do is something like this. So start the high time frame, mark at your key levels. There's no specific way you should be doing it. 110, a little bit of a near-term structure there. If we can pull back into to sell it, remember, if you're selling it, you kind of aim for these bounces. If you're buying it, aim for the highs, right? Where's the sort of targets for the lows at? Cool, 103, 102-ish, cool. Now, those are our levels. There is also near-term levels within this region here. Cool, amazing. And there's a near-term sort of structure points within that as well. And then we go down, start on the weekly, get your levels out, whichever way you want to do it. Cool, there's nothing on the weekly in terms of order blocks. Now to the daily. Daily within this area here. Cool. Is there any key level within that? 109. From an order book perspective, 109 might deem relatively fit to trade from. Then we go down to, of course, just work your way down the time frames just to find an order block that seems relatively decent. One within here. Cool. Just above the high. I know some people will be like, okay, cool, they're going to try and induce you. I think that's what people say nowadays. Just a wick above the high slightly and trade out of it if we can. Then go down to the 12. A bit of a 12 there. Go down to the 8 hour within this kind of region here. Definitely something to consider. It's already been mitigated. 50% of it. I mean, I'd have to get out my fib to be specifics there. But go to euro dollar 8 hour, then down to your 6, then down to your 4. Again, I'm not marking at the boxes for now. We've already done that, but that's kind of how we'll do it. Like this. Marked out that region there. 6 hour. 8 hour. Kind of like that. And then down to 4, sorry. 4 is already encompassed within that region. Oh, cool. Amazing. So around 106. Let me look to my left slightly. Yeah, 107. As a big whole number perspective. But based on previous structure as well, around 106.5 to 106.750. As you can see, 106.5 is just within this box here. Also some big moves from below that. At 106.750, we've seen some previous value there, and then that's all within that. So those are from a booking perspective. That kind of sets in very nicely. So that's literally how we would do it. Obviously clean it up slightly, but that's where we're at for euro dollar. GBP USD. Done it again. GBP USD. Similar. Let's just start from this. Remove it all. Go to the daily or weekly. mark out the levels first, or doesn't matter which way you do it, you're going to get the same key levels anyway. 126 whole is a big level from previous structure. Cool. 126. Well, there's near-term support, turn-in resistance here at around 123,500 to 123 whole. Anywhere within there. Can mark out a box if you want. Again, you can adjust it the way you kind of do your colors or whatever. This is what works for us. 123 whole. Cool. Is there any order blocks there? Nothing on the weekly, not really. Anything on a daily? There is a little bit of a daily region here. Up here. Also one just above, but also into that 126 handle. Cool. 12 hour. Anything on a 12? There isn't. Anything on 8? Nope. 6? Yes. 6 hour within this. So now, what do? Box it out. Again, you can just encompass the wick if you really want to. I won't argue against that. Now, is there any whole numbers within this? Well, 124. Let me just look to my left slightly. Is 124 being a bouncy level? So 124 is this one up here. Yes, definitely. Look to your left. Look to your left. We've seen bounces within that. So if we trade into 124, then that is a level where the markets may see some bounces. And if the markets are still fundamentally short GU, then 124 would present some value. 123 again is something to consider. That's just near-term level here. All you're doing is just monitoring and waiting. But ideally, the best scenario would be around that 124 handle all the way up within there. There's a nice big key level there. There's a nice order block within that. In terms of like everything added together, that actually does make sense. But we'll have to wait and see if we can get up into that region. Ideally, yes. And that just presents better opportunity because, as you know, I'm short up at 129.5, up into these regions here, this region here, and I haven't re-entered yet until I see some value and some breaks. Then all I'll do, we trade into this, wait for a break, wait for the pullback, and then sell it into my high time frame key levels, which is that 120 handle, then 118. That's it. That's how simple it is. You do not need to overcomplicate the charts. Keep it very simple. 120. Keep it very simple. And, you know, simplicity pays at the end of the day, right? I remember when people, who remembers when everyone was banging on about Wyckoff now? I did not hear, every single day I saw a post about Wyckoff. Now everyone stopped using it. It's because probably it doesn't work as much anymore. So this is why every strategy is going to come in and it's going to fizzle out. But work something that works for you. Every strategy works in their own way. It's how you do it. But as long as you do the most important thing first, which is understanding the bias, what the banks want to be trading toward. And the way they understand it is by looking at the economics, the fundamentals, what's happening in China, what's happening in the Fed, what's happening with the data, what's the direction of the data, what's the yields doing, what's the equities doing, everything encompassed together. And they have a bias and they trade with that bias. Hopefully that has made a bit of sense. Again, keep it simple and do not overcomplicate it. Now that you've seen how we can basically go on a lower time frame, remember this is just ways of just slightly refining our area just so we can get a slightly better entry. But at the end of the day, because we're trading on those high time frames and we're swinging trades for ages, we don't mind having such a slightly wider stop. So it's just a matter of just timing. That's all you'll be doing for the lower time frame timing. But you can also, you know, get timing from data. So if you start to see data turn, that may be a time that markets may want to start to get long or get short specific currencies. But we'll go over that in another video. But more importantly, thank you for lasting this long. I know we've had quite a relatively large session. You know, a lot of information was covered, but like we mentioned, there are specific rules to this video. You need to understand the basics. We're not here to teach the basics. I can show you many people who are able to do that and wants to do that. But for now, if you do, of course, want to join the team, please click the website link below in the description. We have obviously our new member join the team called Mir Walensky. He was an ex Deutsche Bank trader, or equities trader, ex-Nomura, ex-BNB Paribas, who's a managing director. And he's got a lot of experience. He's got 35 plus years experience. So you can definitely ask him questions on lives on how institutions think and what's your views on this, etc. Anything. Apart from that, have a good rest of your week or weekend, whatever sort of day you're watching this. And if there is any sort of specific videos you want from us, please drop it in the comments. Have a good rest of your day, everybody, and take care.